Hey there, it's Will here. I wanted to point out an issue with stocks that have dropped a lot and they start to come back. And a lot of people will get in at that point when they start to see it coming back. It's kind of like a FOMO, fear of missing out. And I just wanted to show you some examples of why that might not work. And if you've been watching my videos, you understand that I'm looking for a certain pattern of price and some of the indicators in an uptrend. I can talk about that in a bit, but my main point today was to talk about when you might want to get back into a stock. And the people have different philosophies, but I just want to point out what I do. It's kind of consistent with what I want to see. I don't try to time the bottom or guess when there might be a bottom. So I'll just explain that situation. And so I use the 8 EMA as a moving average. It's an exponential moving average as a decision line. And I like to see stocks, in an uptrend, or ETFs in an uptrend above the 8 EMA, closing above the 8 EMA like this. And so what you can see here, I'm using TC2000, which is software for charts. And if you want to get a free trial or $25 off purchase, check out the link in the description below. I've got the gold package and real-time US data. And there's some drawing tools here, like for lines and boxes and text and stuff. You can make notes on here. But what I wanted to point out here was if you're in the stock and it breaks down like you see here, these are volatility stops, which can be used as stop losses. They kind of take into account the range of the candles, the up and down, so you don't get stopped out all the time. So you have this dot, it's kind of flat, and then all of a sudden it triggers a stop loss here. And basically what will happen is people will do things like they'll see it come back off of the 50. So it sat here, it bounced a little bit. You can see a wick here. So it looked like it's supported at the 50. So somebody might buy when it gets down near the 50. Then someone else might see, okay, the next day we went up and we have a nice up candle, so I'm going to buy here. But what I'm looking for is the price to close above the 8 EMA. Ideally, I want to look for an up-sloping trend, up-sloping 8 EMA. So right now we see that the slope is downwards, right? So what'll happen is it'll start to come back and then it'll hit a lot of times near the 8 EMA. So it looks like it's coming back. It bounced off the 50. It's got support, and we're just going to go back again like it did in other situations. This is the 21 EMA. So a lot of people have had success maybe buying at the 21. But you're kind of bottom feeding. You don't really know that it's going to be able to sustain that. You don't know if it's going to just keep going down. So I can't use that methodology myself. So then what happened was it hit the 8 EMA close and it bounces, and then the next day, so you might have bought here, you might have bought there, assuming it was supported. All of a sudden the next day we're down. And then we have a gap down way down here and all the way down there, and then a huge push back up. So that's a good sign, like from a candlestick perspective, that that can be seen as positive, that we gapped down, we went all the way down here, and then we pushed right back up. So sometimes when you get really far away from the 8 EMA, it's a reversal, it's going to come back to that. But so what happened next was we had another up day. So you have this kind of reversal where it came back up, and then we have this positive candle. And so people will think, okay, it's a good time to buy because we're starting to go back up again. But then what happens is it gets close to the 8 EMA. And then now today, this is a pre-market. So one of the benefits of TC2000 is you can see the stocks, the prices in the pre-market. So it shows here 8:18 a.m. and Eastern time. And it's actually the prices, prior to the market open. This might change when the market opens, but I'm using this as a demonstration that um, this 8 EMA can often be a resistance point. So if you're gonna short, um, you could short here where you see it's not, it's starting to go back down again, but the 50 is a strong support level and you're very close to it. So now what happens is we have this rebound and then potentially a rejection, not only of the 8 EMA but also of the 50. So if the market opens and it kind of goes down, that's probably a good entry point. It's kind of the reverse, like if you're in an uptrend and it pulls back and you get close to the 8 EMA that you want to buy on a show of strength near the 8 EMA in an uptrend. So the reverse is you're in a downtrend, you might have missed the initial drop here. We came back, now we're going down, so you'd buy there, like sell as a sell short, and now you're potentially hitting it again. So it's another shorting opportunity potentially. If we look at ARCG, this candle here, you had this big down gap and then a reverse. And now today we're going down again. So, this is a sign that this thing might continue to drop. So that's kind of mainly what I wanted to point out, where when you get support at a 50, which is good, you might not have enough strength and you might actually bounce once you get up to 8 EMA. So if you start to see a reversal, it's not necessarily going to consistently result in positive growth. Other things you can look at are the volatility stop. So when it's red, that means that you're generally in a shorting situation. It's confirming, I guess, is what I'm saying. You're below the 8 EMA. Now, because the 50 is right here, I wouldn't be shorting myself just because it's, it's very close to a support moving average. The other things you have are downward MACD or price percent oscillator. So you can see that this is heading downwards like this. So I don't buy in those situations. I buy in this situation. If I put I'm not sure if I can do this. So I'll put a box. I already have a box, but hold on a sec here. From the price MACD sort of perspective, I'm looking for a cross, ideally from a downward, a bigger downward, because this is in an uptrend here. But so let's see if I can go back. Yeah. So this scenario, you cross up on the MACD or the price percent oscillator, you have a rising stochastic, and you pop up above the 8 EMA after being in a downslope. This isn't even a huge downslope. It'd be better to have a bigger downturn reversal. So we can see, like in the case of this RK, that now we're below the 50 and we kind of bounce downward. So that's a sign that we could be heading down, maybe even to the 200 or some other support level at a previous point. But this is not the time, in my opinion, to be buying. If you want to look for things that are in uptrends, we have, these are ETFs, but we have XLE, which is energy. It's in a bit, obviously it's been up for a while now, but see how we broke this down and we started to come up and we had a cross of the MACD. So this is like the perfect scenario right here. Break of a downtrend, red volatility stops turn to green, above the 8 EMA, above the support kind of at the 50 here and the 21. And we have a MACD or a price percent oscillator cross, momentum cross, and stochastics rising. So this entry point is like the perfect thing. So I consider this like a fractal scenario where MACD cross, stochastic rising, cross above the 8 EMA, closing above, green volatility stops, break of a downtrend. Confirming of a downtrend is of an uptrend is even better. So when we have a pullback and then a continual rise at the 8 EMA, that's a higher low. That's an excellent, any of these points here where we had support at the 8 EMA, our support, our confirmation of an uptrend. All right, guys, I hope that helps. Don't forget you can get TC2000 in the link below, free trial or $25 off. Thanks to everybody who's picked it up. Hope you're enjoying it as much as I am. It's a great program. I've talked about it in quite a few videos. So talk to you guys later.